Good morning, Paul Georgie from Allendale. It's May 20th, Monday morning, and the focus this morning is the planning progress that will be released this afternoon by USDA. Trade seems to think will be around 60 to a little over 60% planted. There's some estimates up as high as 70%. If we got to the 70% level, that would mean we met the record planting during 1 week, which was 42%. Compared to this last week, we only had 28% planted. Our average this time of year is 81% on corn. Soybeans, last week 6%. The trade believes that we could be up to 30 to 35% of the beans planted compared to about 45% on average. So that's a key number. With the weather situation this past weekend, we had more open time, a better chance to get some crops in the ground. Eastern Corn Belt especially was able to plant for more days than what was expected. So we could see some good numbers here today on planting progress, but that's going to be the focus. That's what's happening overnight. Continued tight supplies in old crop corn and soybeans continue to affirm the July contract. The new crop, December corn, November soybeans, under pressure because of the planting progress. So we're going to see some continued play there in the spreads. That seems to be the focus here for the last week. Going to continue early this week. We have option expirations on Friday. We have a holiday on next Monday, so trade's going to be adjusting this week ahead of the holiday weekend, ahead of option expiration. Some of the other news that we've got, the CFTC report on Friday showed that funds increased, or managed money increased their long position by 14,000 contracts in corn, around 11,000 contracts in soybeans, and they increased their short positions in wheat by about 6,800 contracts. The basis situation in Argentina, South America, suggests that it no longer is profitable to bring corn into the U.S. as the basis in Argentina increased here late last week. The forecast is for moisture coming across the Corn Belt early this week and then drying out again. So the concern of being able to get the crop in the ground is eliminated somewhat here as we start out the week. The cattle on feed report Friday was a bit on the bearish side, 96.6% on feed, placed at 115.1 and 102.2 as far as marketing goes. I got to say, Rich Nelson in our office here put our projections together, and these numbers were extremely close to what Rich had estimated here for Allendale. The pressure in the pork market came Friday on news that there was some kind of a virus circulating in Iowa hogs that found out to be porcine epidemic diarrhea, PED it's called. Usually affects the young pigs. That causes some death loss. Not transferable into meat, and should be no problem as far as the consumption of meat. But the problem could lie in that we can have shorter supplies of hogs as we move out here in 4 to 6 month periods. So it's actually should be a positive to price rather than a negative, as we've seen on Friday. We had cutout values in beef improve again on Friday. Choice was up 74 cents to set a new all-time high at 209.51 for choice. Select was down 40 cents, and pork cutout was up 12 cents. We expect markets to open a little lower here in livestock as we start the week. The cattle trade is extremely oversold right now on the indicators, and watch that and see where we go, as it is carrying quite a discount to cash at this point in time. A lot of reasons to stay in touch with Allendale's research. We've got the Allendale May Ag Leaders webinar coming here tomorrow night, Tuesday at 8 p.m. So don't forget to sign up for that. And we're going to be covering some interesting topics. But Rich Nelson will share some ideas there. So we look forward to having you all at the webinar. And again, if you got any questions, 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning.